Hello again. Jake Fraser, consultant at Roskill, joins us now to talk battery materials. Jake, great to see you. We're talking lithium today, and a great deal of volatility in that market over the last 12 to 24 months. Just put in a nutshell for us what's happened.
Yeah, it certainly has been, and we certainly feel that this can be attributed to two main factors. This is predominantly due to two markets being in a state of flux. These markets being batteries, specifically lithium-ion batteries themselves, and the lithium market itself. With regards to batteries, its end-use demand profile is shifting from predominantly portable devices and consumer electronics, shifted towards the automotive sector. In regards to the lithium market, we're seeing the end-use demand profile from historically industrial applications such as greases towards the battery cell space itself. Such transitions certainly don't occur without headwinds, and this kind of reflects the complexity of the supply chain itself. So within 2019, we've certainly witnessed probably three key main trends. The three C's of 2019, we're calling them. With the first being price crashes. We've certainly seen the lithium price fall back a significant amount from early 2019 down to around $7,000 a tonne in Q4 this year within China itself. Now, it's important to highlight that there is some regional disparity there within ex-China prices surrounded with Japan and South Korea versus domestically within China. But this has been fundamentally driven by an oversupply of refined material in the market.
And it's so strange to hear that, because over the last couple of years I've been interviewing people in the battery material space talking about the need for lithium, low inventories globally. Now you're saying there's a global oversupply, and possibly investors will be thinking about getting out of the lithium game.
Yeah, I think that the sentiment has certainly copped a fair whack in the last 12 to 18 months.
Is that a technical term?
We can put it that way if you like. But what we see moving forward is still certainly strong fundamentals. The short term still remains relatively volatile. Throughout 2020, we do expect prices to continue to be soft, potentially decreasing further depending on a contract basis in the next 3 to 6 months, but we do expect them to bottom within the next 12 months. This will be a function of end-use producers at converters in China that convert spodumene concentrate into refined chemicals such as lithium carbonate and hydroxide, which are used in batteries, chewing through the inventories that have been built up from the quite quick amount of supply that Australian producers have brought online. And this is pretty much what has been driving the market prices down in recent months.
And talking about those upstream producers, miners too, changing their game, their focus is shifting considerably.
That's correct, yes. And what we've seen is miners have really brought new supply to the market with great haste, and they should be commended for such. But now we're seeing, as a result of this oversupply of feedstock material as well as refined compounds, a shift in miners' preferences to focus on optimizing the production process, making sure they're focusing on their cost profiles, so in a low market price environment they're able to maintain profitability and sustainability in the long run.
And perhaps a good time to buy.
Yeah, I think that's certainly the case, potentially over the next 12 months. What we've witnessed in 2019 is a significant amount of what potentially could be the beginning of a large industry consolidation. And this has been witnessed from several aspects. We've seen a lot of the major players such as Tianqi Lithium and Ganfeng Lithium start to consolidate. Tianqi has got over 20% placement in SQM, which is one of the world's largest brine producers. And Ganfeng has really started to become quite diversified, with now having a placement in Bacanora, which is a potential future producer of a claystone mineral, as well as having placements in existing producers such as Pilbara Minerals in Australia.
So we're seeing a real shifting and settling of the market as end user uses change and the demand changes as well. Have we got further to go as far as bottoming out is concerned on price?
I think it really depends on what perspective you have. If we look at within China itself, there's certainly a significant amount of stock. We estimate on a refined basis, on a carbonate and hydroxide, around 38,000 tonnes of LCE oversupply in 2019. Through 2020, we estimate this might be chewed down to between 15 and 30,000 tonnes. It's a bit early to tell. However, on the upstream perspective from the mine, there is significant oversupply there also. And this will be a function of how quick converters in China can get through that feedstock, which again is a function of how quick EV adoption rates tend to pick up in 2020 and in future. Also, which is driven by the fact of the demand for lithium-ion batteries in the consumer applications as well.
This is crystal ball stuff, really. You can look at how people are chewing through inventory, but really one never knows how the next 12 months is going to pan out. What's your message to investors? Is it to be cautious and keep watching, or to expect that bottoming out to tick up at last sooner or later?
Yeah, certainly. I think when it comes to the lithium market, the short-term sentiment has definitely copped a fair bashing, as we recently spoke about. However, the long-term fundamentals do remain significantly strong. Given the short-term uncertainty and fluctuation with the demand growth, which has still grown in 2019, just not at a faster rate as previous years, we do expect prices to pick up through the 2021 and 2022 periods. Whether it's going to be sustainable, we don't expect that to occur until probably halfway through 2021, which we then expect demand to gain perpetual traction between 2022 and 2023, when the EV market starts to become a more cost-effective basis for consumers to consider over conventional combustion engines, and as the market then grows in terms of scale as well.
So the lithium market, just one to watch really at the moment, Jake?
Yeah, I think certainly that's the case. Again, with the level of uncertainty we've seen, there is definitely some optimism for future, but producers definitely have to kind of ride out the low price situation at the moment.
Jake Fraser, thanks very much indeed.
Pleasure to be here.